Good morning, good morning, good morning. Welcome to today's morning blast. It is, what day is it? Wednesday, the 23rd of April. It is St. George's Day, so many happy returns, or whatever the phrase that we're going to use today for the fellow Englishers out there. Obviously, being that he was Turkish, there'll be plenty of lefties that will remind you of that. I say just embrace it and have a kebab later on today. But that's just me. Up the Albion. But before we crack on with today's morning blast, I will get the legals out of the way. As usual, nothing discussed on this space constitute trading or investment advice or infers any kind of endorsement by PIQ or indeed the hosts, which, as you know by now, is myself, Mr. Ryan Paisley, and of course the marvelous, magnificent, the ranty Mr. Michael Brown.
Good morning, Ryan. Good morning, everyone, from what is a very grey and gloomy southeast London this morning.
It's green and pleasant land, mate. It's a green and pleasant land. Get on with it. Come on, embrace it.
St. George will be running across to slay a dragon shortly, I'm sure.
Well, normally like kicking out time on a Friday night, but yeah, sorry, but that's about me. Right, what's been occurring?
Dear. Indeed, yes. Good morning, everyone. Things have turned around rather quickly in financial markets after what was a pretty grim day on Monday. We had something of a turnaround Tuesday yesterday, and sentiment has remained relatively firm overnight. Yesterday saw the S&P 500 close around 2.5% higher, with the Nasdaq 100 notching similar gains, and futures on those indices trade as near as makes no difference about 2% higher this morning, albeit some way off the overnight highs. And that positivity has kind of filtered through into other asset classes as well, although not in the way that the textbooks would say. It's been more a case of a buy America trade as opposed to the sell America trade that we had been seeing in recent sessions. So Treasury yields have come lower across the curve, the 30-year falling about 3 basis points yesterday and a further 7 basis points this morning. Briefly trading below 4.8% as European participants got to the desk earlier on, and the 10-year yield is currently trading down by around about 7 basis points from where we opened up yesterday, currently trading around 4.35%, and the dollar has also rebounded, with the dollar index reclaiming the 99 figure and the greenback trading in the green against all major peers. The reason for that improvement in sentiment, well, firstly started as a little bit of a mechanical bounce early doors yesterday. Effectively, the market had come such a long way lower on Monday that it was really a sort of dead cat bounce to kick things off on Tuesday. Those gains were then built upon after reports from some comments that Treasury Secretary Scott Bessent had reportedly made. He, in a private closed-door summit of investors on Tuesday, had apparently said that he envisages a de-escalation with China and views the current situation as, quote, unsustainable. Bessent did add that negotiations haven't yet started between the US and China, but that he does believe a deal is possible. I would note here that it is exactly 2 weeks since Scott Bessent said, and I quote, "It's Main Street's turn now." So I'm assuming that Main Street's invite to that private behind closed door summit with no media access ended up getting lost in the post. But we will nonetheless have to forgive him on that one and cut him some slack, I suppose. The gains have been further extended overnight after some comments from President Donald Trump. He was talking about China as well. And agreed that the current tariffs on China do indeed amount to a trade embargo. He was also touting the possibility of a deal and saying that the ultimate tariff on China won't be near 145%, but it won't be zero either. Effectively, what's happening here is, just to sort of boil it down, the United States appear to be effectively negotiating with themselves. President Xi over in China must just be chuckling away to himself at this point, because he's done absolutely nothing. And Trump and Bessent are folding like a cheap suit nonetheless. Of course, I would stress that what Trump says in public and what he actually does are two different things. I would also stress that Trump saying something today does not necessarily mean that he will say it again or necessarily believe it the next time that we hear from him. So do take that with a little bit of a pinch of salt. We also heard the president talking about the Fed chair overnight, saying that he has and never had any intention intention to fire Fed Chair Powell. I will remind you, of course, that it was only last week he was saying that Powell's termination cannot come soon enough. Again, I would be taking this with a little bit of a pinch of salt. I think he's got a tap on the shoulder from some of his advisors here. But nonetheless, after he said he had no intention of firing Powell, he said that he wants Powell to be early, not late, and that now is a perfect time to lower interest rates. So I would expect that Powell's head will be back on the chopping block probably about 8:30 in the evening London time on the 7th of May, after the Fed have kept rates steady at their next meeting. Anyway, away from the United States, plenty else to get through this morning. Just to round off a couple of other things in terms of the political situation stateside. Politico sources reported yesterday that the White House is apparently close on trade agreements with Japan and India. That's not interesting. What is interesting about these reports is that basically the way these deals are being structured is as memorandums or memoranda of understandings, which then lay out a blueprint for future deals, which could take months or even years to achieve. Of course, that is also going to be the case of if and when one or two deals are struck. As we alluded to yesterday, everyone else will try and use that as a framework for their own arrangement. Sticking with political situation stateside, reports yesterday via Reuters sources noting that the Trump administration is reportedly thinking about cutting US drug prices to the levels at which those drugs cost overseas, i.e. here in the United Kingdom. Those sources reports noted that pharmaceutical bosses have actually said that the US doing that would be more damaging to their businesses than the imposition of tariffs, which suggests that they are operating at perhaps margins that are wider than they should, if I'm being polite. Other bits and bobs from yesterday, we had the IMF. They announced their latest round of economic forecast. They cut their 2025 GDP growth expectation to 2.8% from a prior 3.3%. That means that it won't come in anywhere near 2.8%, but nonetheless, it just adds to the degree of pessimism around the global economy at the moment. The IMF also flagging that what's going on in terms of trade is a reset and puts the global economy in a new era. What on earth would we do without pertinent insight like that? Sticking with the issue of trade, and specifically in terms of China, various Chinese tech firms are reportedly looking to list in the United States despite the ongoing market volatility and obviously geopolitical tensions between the two nations. These firms, according to Bloomberg sources who ran these reports, include, and I'm going to struggle with these, aren't I? Walnut Coding, I can get through. The other companies that are
That's a
reportedly
tough nut to
considering.
crack.
Oh, dearie me. Oh, God. The other companies that are reportedly considering these listings include Cloud Sky, Zai Hui, and Zhonghe, who may or may not list in the United States
Don't
and
do the
may or may
eyes.
not. Oh, Jesus. And they may or may not be called that, to be completely honest with you, given that Mandarin is by no means a specialist subject of mine. In terms of other bits and bobs from yesterday here in Europe, we had reporting also via Bloomberg sources that French President Emmanuel Macron is apparently mulling the prospect of a snap election in autumn. Not sure 6 months' notice is overly snappy, but there you go. These sources noting that Emmanuel Macron is apparently seeking to capitalise on what he's calling his return to international prominence, and the options that are on the table is either an election, a legislative election, I should say, this autumn, or a legislative poll in early 2026, which would mean that poll being held at the same time as various municipal elections that are already scheduled to take place in France. This is interesting, obviously, because we know that Macron doesn't have a workable majority in Parliament at the moment, but also because he said back in December that he would try and avoid a snap election before the end of his presidential term in 2027, which clearly doesn't look like it's going to happen anymore. In terms of other things to bear in mind from yesterday, it was a relatively busy day on the data docket. We had some subpar US sentiment releases. The Philadelphia Fed Services Index that fell to minus 42.7 in April, which is its lowest level since the pandemic, and the Richmond Fed's manufacturing gauge that fell to minus 13, down from a prior minus 4. Both of those coming in softer than market participants had expected. The same can also be said of Eurozone consumer sentiment, which remains very very, very depressed indeed. Other notable headlines that we had after hours from the United States yesterday, of course, a lot of focus was on earnings from Tesla. The earnings themselves were utterly grim.
Shit.
Tesla delivering top and bottom line misses, operating income that was at about a third of where market participants had been expecting it, a lot of negative commentary around the impact of tariffs, and also Tesla saying that they will have to revisit their guidance in the Q2 earnings report as a result of all of the uncertainty. They also dropped the prior reference to returning to growth this year. Nevertheless, Tesla traded about 5% higher in after hours last night, and this seems to have been as a result of comments from Elon Musk on the earnings call, who noted that he will pull back significantly, no sniggering at the back, from his job with the Department of Government Efficiency in May. Of course, one of the things that has been, or one of many things I should say, that has been concerning Tesla investors of late is basically that Musk is sort of spreading himself too thin. So that idea of him stepping away from the government somewhat has provided a little bit of a
Just
boost
on
to the
this,
stock.
the
Go
timing was
on.
pretty good actually, because there was a group of state treasurers had got together yesterday and put out a kind of an open letter, basically saying to the Tesla board, like, what the fuck's going on? You know, Tesla's looking
Mm.
like it's going downhill. Where's Musk's priorities? And obviously, these are guys with like the state pensions and stuff that are putting a lot of money into Tesla. So the timing for him to then go, hang on a second, I'm going back to Tesla, I think makes sense, and I think it's obviously something he's doing just to try and prop up the market, or the but it does just reek of, this is kind of just throwing anything they can at it, or he can throw anything can at it. Because I think the margins were like 2 point something percent this quarter, which is ridiculously low.
Yes.
I mean, yeah, we've said for like, it's not a new thing to say that. There's a lot of birds in the background where you are.
Oh, sorry, I've got the window open.
Okay, nice. Beats my
Oh,
seagulls.
that's going to go down as a skive now, isn't it?
Oh
I'm
yeah,
going.
exactly. He's working
I'm.
from home, Zach. He's
I'm.
working from home.
I'm not working for it. I'm as soon as we finish this call, I need to go to Canary Wharf, and I couldn't
Yeah,
get be
all
bothered
right,
to
all
go
right.
to the
But
city first. I'll
what
send
was
you a
saying, but
selfie.
yeah, all right, all right. But going back to Tesla a second, one thing we know is like, and it has been like the story for many years now. It is a cult. The price does not make sense. So people kind of screaming that it's gone up as the price went up when the results were shit. Yeah, it doesn't make sense. But yeah, it's kind of expected now for Tesla, unfortunately.
Indeed, yes. So it will be interesting to see how that one works. Now, the other thing, and I think this was what the pension and institutional managers were mentioning, was that Musk, and people forget this, if you're the CEO of a public company, you have a fiduciary duty to the
Oh,
shareholders of that
fiduciary.
company.
Oh,
And basically, these guys were saying, you've forgotten about that and you're running around, trying to run the country instead. So, yeah, I think that
and
was the
shagging.
issue
He does a lot of
there.
shagging.
Well, I didn't want to go down that line, but yes, he does seem to be keeping himself busy on that front as well. Moving swiftly on, we heard one for Tom Talks Cars while he's not slagging me off on the internet. Intel, they announced overnight that they are planning this week to cut more than 20% of their headcount. That will amount to approximately 22,000 jobs being lost at the chip maker. Of course, remember, Intel do report their Q1 earnings after the market close on Thursday, tomorrow. So we may get some more colour on that in the earnings report or on the call. And last but by no means least, a couple of updates out of the UK this morning. We had some rather grim public borrowing data. The deficit in the financial year to the end of March 2025 running at 152 billion, considerably above the OBR's estimate of 137 billion. So another gold star for the folk over at the Office for Budget Responsibility. Nevertheless, the reaction in gilts this morning has perhaps been a little bit surprising, with the 30-year yield falling about 10 basis points in early trade, the 2-year yield rising about 5 basis points in early trade. This seems to be primarily as a result of an announcement that we had from the DMO, the Debt Management Office, a little bit earlier on. They have trimmed their sales of long-end gilts and increased their sales of short-dated gilts instead. And I think that is why we have perhaps not seen as significant or as adverse a market reaction in UK fixed income as we would have perhaps expected, given the rather grim borrowing data that we had out about 90 minutes ago. And for the time being, that is all from me.
Thank you very much, Mr. Michael Brown. Before I kick off with Zach's, well, some highlights from Zach's always awesome overnight news roundup, which you should definitely read and subscribe. Check the pin tweet. Shout out to Cam, who will be doing not only the crypto blast today, but the first, our inaugural PIQ on the Block series, which is where Cam, obviously I'll be there, but I will not know what's going on because crypto's not my bag. But Cam will be interviewing some industry leaders in the crypto space. And today was kicking off with Andre, who is director and head of research at Bitwise Europe. So that's at 4 o'clock UK time this afternoon. So definitely check out that. Also, of course, a shout out to Angie for the grain blast that we will be doing usual time at 2:15 UK time. But now cracking on with the overnight news roundup, courtesy of the amazing Zach, who is finally back from his holiday this weekend. Starting off with some trade headlines. As Michael's alluded to some of this already, but Trump said the 145% tariff on China, quote, won't be that high and will come down, but not to zero. He added China must make a deal or the US will, quote, set a deal for them. Obviously, this is what gave stocks a mighty boost yesterday evening. Japan's economy minister may head to Washington by April the 30th for the second round of tariff negotiations. Back to China, they've reportedly asked South Korean companies not to export products containing Chinese rare earths to US defense firms. Obviously, if there was a story last week that China were severely limiting any exports of rare earths, not just to the US, but in general. President Xi warned Azerbaijan that trade wars undermine the rights to all nations, or of all nations, sorry. Chinese plastic plants are now sourcing LPG from the Middle East instead of the US, shifting freight flows. Mercedes Benz CEO called for a level playing field on China made EVs in Europe. We're starting to see the wave of Chinese EVs kind of coming across Europe, so interesting to see how that plays out. India may cut tariffs on high end motorcycles to zero as it looks to strike a US trade deal without yielding on broader protectionism. Vietnam is accelerating free trade deals with the US and is launching talks with South Africa this week. Macro headlines: Trump said he won't fire Powell, as we know, as Michael said, but wants, quote, more action on rate cuts. Fed Governor Kugler argued for holding rates steady, citing inflation risks and market volatility. Bank of America flagged the worst sentiment balance on macroeconomic outlook since the earnings calls, sorry, since 2009. So that's a bit of a
That's
negative,
cheerful, isn't it?
yeah, negative flow for you there. Investors are watching this week's Treasury auctions with that's today, Wednesday's 5-year auction in focus due to foreign demand concerns. Janice Henderson, or Janus Henderson, whatever you want to call him, is weighing a 10% cut in US exposure, citing diminished global appeal under Trump's policies. China's Shanghai Gold Exchange will allow overseas delivery for certain products to reduce dollar reliance. Japan's factory activity contracted for a 10th month in a row, while services return to growth. The Swiss franc is up 9% versus the dollar in April, raising pressure on the SMB to intervene. Not that they ever intervene, wink, wink, nudge, nudge. Singapore's core inflation fell to its
Well,
lowest
actually,
level since March
on that, I was
2021. Yeah, go on.
no on the SMB intervention. We did have the weekly site deposit data out yesterday, and it didn't actually point to any intervention yet.
Give it
But of
time.
course, I was going to say with that lot, give it another week.
Where was I? Swiss franc done that. Singapore's core inflation fell to its lowest level since March 2021. Where is this inflation everyone keeps telling me about? India's April activity improved on strong goods and services demands. That's per the HSBC's flash survey. One for those with a sweet tooth. Chocolate makers are cutting hedges, betting the cocoa bull run is over. Brazil, via a BRICS official, I can't believe they're still going, said the bloc will push for international cooperation as US isolation grows. Okay. I'm not really sure I fall for that one, but yeah, you do you. Just quickly as well, just whilst we've been on air, Germany's private sector, well, the PMI data's out, and Germany's private sector contracts as services slump on tariff worries. Just on this, so the German services PMI drops sharply to 48.8. That's contraction for anyone keeping note. That's the worst reading since February 2024. And we know I won't miss an opportunity to talk about negative data with Germany. Geopolitics now. Zelensky rejected a US proposal to recognize Russia's control of Crimea, casting doubts over ceasefire prospects. Obviously, just a side note on this one, we do know that Trump is kind of mentally kind of looking to walk away from this now if something's not done in the shorter term. I think he wants to focus on Iran and China and such like. So we need to keep an eye on what's going on over there. European leaders view Putin's ceasefire proposal as a tactical move to corner Trump and betray Ukraine. And now some equity and corporate headlines. Obviously, as we know, Tesla missed the EPS and revenue expectations, but shares rose. Musk said he'll scale back his White House role. He also said that the Optimus robot production was delayed by rare earth supply issues. I guess this is going to be the way of robo taxis, which we'll still be talking about this in 6 years' time. ByteDance, Alibaba, and Tencent stockpiled Nvidia H20 chips before H2 no H20 chips. That's one, not the water. Before the US export ban.
Oh, I thought I
um,
was bad.
Oh, well, we're both terrible, let's be honest.
Well, yeah.
Intel plans to
All right.
cut over
Don't rub it in.
20%. Intel plans to cut over 20% of staff this week due to reduce bureaucracy. Alphabet is exploring shifting Pixel production to India due to tariffs on Vietnam-made devices. Uh, Le- uh, Lenovo, HP, and Dell plan to open factories in Saudi Arabia, taking advantage of low US tariff rates. Here's one for you. You'll love this. Brandon Lutnick, son of the Commerce
Oh, I've
Secretary
seen
Lutnick,
this.
is going to be launching a Bitcoin SPAC with SoftBank and Tether. Nothing to see here. Wink, wink, nudge, nudge. Trump media announced plans to roll out retail investment products, including crypto. Obviously, nothing to see here. Wink, wink, nudge, nudge. Capital One beat Q1 profit estimates on strong card spending. OpenAI Sam Altman is stepping down as Oklo chair, paving the way for a merger. US regulators have announced plans to eliminate petroleum based food dyes. Kellogg's will adjust formulas accordingly. SAP, the darling this morning, they were up 10% last time I saw, beat Q1 profit expectations and reaffirmed its cloud guidance. BMW,
That is
gone.
that's given a huge boost to the DAX as well.
Yes,
They're
huge,
the
yeah,
big
huge
stock
weighting. Yeah,
in the German benchmarks.
a huge weighting in the DAX. BMW will integrate AI from DeepSeek into new China models this year. We also heard this morning that Porsche are going to be doing some infotainment or whatever the word is called for specifically for the Chinese market. It seems that a lot of European car brands are actually going to be using Chinese software for all of that stuff, kind of currying favor with the Chinese. European pharma CEOs urge the EU to raise drug prices to EU levels to support innovation. Ryanair hedged future fuel needs amid lower oil prices and sees no booking impact from tariffs. And finally, for me, because I think I'm running out of things to say, Nomura exec said traders, pardon me, are finally nearing max risk capability after the Archegos hit. Actually, one more from me. BYD is restructuring its EU business after execution missteps. And that's it for me for now. Back to you in the studio.
Good stuff.
Studio.
Thank you, Ryan. In
That's all
terms
right.
of today, then, it is Flash PMI Day for pretty much
Yes.
every major economy, which, depending on who you are, you either hate it or you love it. I am firmly in the former camp. In any case, at 9 o'clock this morning, so in about 6 minutes' time, we get data out of the Eurozone. And then at 9:30 this morning, we have the Flash PMI figures out of the UK. In short, all of the indices are expected to point to a slowing in economic momentum, but across manufacturing services and the composite output metrics, primarily as a result of the uncertainty caused by tariffs, of course, which were thrown in place and then taken away again right before the PMI survey window would have opened. We also have the S&P Global Flash PMI figure out of the States this afternoon at 2:45, and that, of course, comes ahead of the more widely watched ISM PMI metrics, which are due in a week or so. In terms of other things to keep an eye on the calendar today, on the policy front, we are due to get some wages data from the ECB this morning. The Bloomberg calendar has this released at 11 o'clock London time. The ECB website has it at 9 o'clock London time. So God only knows when the Q1 wage numbers are actually going to be released by the ECB, but do just keep that on the radar nonetheless. We also have the Fed releasing their latest beige book of anecdotal economic evidence. That is due at 7 o'clock London time this evening. And another busy day of speeches up ahead as well. 4 Fed speakers on the docket market, 3 from the ECB, 3 from the Bank of England as well, including Governor Bailey and Chief Economist Hugh Pill. And a lot of commentary on the sell side has been around these remarks, particularly from Hugh Pill, and the potential for those to be framing the MPC meeting on the 8th of May, where the market is clearly pricing, fully pricing, I should say, a 25 basis point rate cut. Other things to keep an eye on today, we have US supply due at 6 o'clock London time, a $70 billion 5-year note auction. That comes after the 2-year sale tailed by 0.6 basis points yesterday and ahead of the 7-year sale on Thursday afternoon. And Q1 earnings season continues today as well. Before the market open, we hear from AT&T and Boeing. Obviously, lots of turbulence affecting the latter there. And then after the market close, we're due to hear from Alaska Airlines, IBM, and Chipotle. Taco Bout a busy earnings slate after the
Oh
close.
my God. Oh, he didn't. Oh no. You had that one you've had that one in the holster for like the whole show, haven't you?
I've even written it down to remind me to have to say.
Oh God. Oh, I need to go for a walk. On that bombshell, um, Michael, thank you for just being yourself, I guess. Oh God. I don't think I don't think I'm going to recover from that. Listeners, let's move on very sharpish. I apologise profusely to my dear friend.
I
We'll
thought that
see.
was quite good.
It was. That's the annoying thing. That's the annoying thing. I was speechless momentarily. Yeah, let's move on. Yeah, see you tomorrow. Goodbye.
Bye bye.